I'm Jim Cook with Plan the Cool Way, and today we're going to talk a little bit about the markets. Lately, year to date, we are looking at markets almost across the board being down. That's really odd. But even though it's odd, I want to let you know that it's technically a good thing as far as I'm concerned. And while I don't like to see accounts going down, what I do like is a return to what could be considered more normal behavior when it comes to the stock market or the bond market. The bond market is down double digits, the stock market's the same. This is kind of strange territory. And for the first time in a significant amount of time, we are seeing months of downward trending market movement. Why do I think this is healthy? And am I just crazy for thinking so? Here's why I think it's healthy. In the past, how many times have we said, oh my goodness, the market is dropping, only to have an immediate V reversal of this, and then it's as if it never happened. As if, that's okay, market will just correct itself. That's not healthy. That's like saying, I can continue to run and push myself, and I don't need to take a moment to catch my breath. It doesn't make any sense. The harder I run, the more I should have to catch my breath. Much like with a vehicle. The further I drive, the more I'm going to need to stop for gas. When I'm stopped for gas, I'm not moving forward. This is a strange moment in time because we haven't experienced this for any reasonable length of time. Yes, at the end of 2018, there was a period of approximately middle of October until loosely the end of December where we felt some downward pull, which was immediately corrected back thereafter. Now, while I hope that our accounts end up popping back up, I don't have to hope in the long run, knowing that we are invested wisely and risk appropriately for where we are right now. If you happen to have any questions about how you're invested, please reach out to me. Give me a call. We'll happily talk. And if you're in a position in a commission account, know that ongoing monitoring does not happen in your account. Those are only for advice-based account or advisory accounts. And if that's the kind of thing that, given what's happening in the market, you're thinking about, we should probably talk and I can explain the difference between those two service offerings. But back to the markets. So what's going to happen from here? Well, I can guarantee you, and I use that word specially, I can guarantee you that one of three things is going to happen. Either the market will go down, it will stay the same, or it will go up. Wow, thanks, Jim. That's really great. But the reality is that those are the facts. Now, when they happen, we don't know. And that's anyone's game. And you can have any pundit or predictor you want out there try to tell you where something is going to be, but they are guessing in the end. Yes, some of them may have more educated guesses, but they don't know. Because if we were to go back in time to December or September of last year and say, where's the market going to be in May? They wouldn't have said down double digits. Therefore, a guess. So what we trust in then is that our investments are held in risk-appropriate investments based on the time when you need them. If you have investments that you do not need to access for a period of time, let's imagine 5 or 10 plus years, this is the natural up and down that we're going to get if we were a boat in the ocean. Every now and then there's going to be a storm nearby. And while ideally we don't go head on into a hurricane, ideally we maybe skirt it, it doesn't mean we don't feel the effects. Some wind, some rain, some waves. That's where we're in right now. Even though the news has been all about how bad everything is across the board, I will tell you that this is technically in a not terrible situation at all. It would be reasonable in a normal year that you'd have a 10 or 11% pullback at some point in time in the stock market. That's a reasonable year. We're not too far off of that. Does it mean that it couldn't drop further? Oh, sure. Because when people panic, they tend to panic even more. But have you noticed that like a child, if they start having a tantrum or start crying and they go really hard, and it's like, oh my goodness, then eventually they sort of run out of steam to cry? Well, I have noticed that if you look back at market drops, that kind of thing can happen too. So if we start to see where the market's just like down, down, down kind of fast, normally people get to a point where they're going, wait a minute, like what's going on? Maybe we're there right now. Maybe we'll be there later on. Maybe it'll take the rest of the year. I don't know. I hope it doesn't take the rest of the year because economically, there's a lot of fine stuff going on. Now it seems people are panicking about slower growth as opposed to we're losing money. Those are two very different things. Are we keeping an eye on inflation? Absolutely. Just because the new numbers came out and they said, hey, inflation was a little bit lower than last month, does it mean it's all of a sudden going to turn off? No, not in my opinion. My opinion is watch the M2 money supply, all that money sitting in cash, and knowing that that's a lot of pressure to go spend money on stuff, whether it's a company, if you're a big company yourself, or whether it's a vacation or furniture, goods, services, doesn't matter. But when we look at that and we say we still have some shortages of goods, we again are down to that textbook definition of inflation: too much money chasing too few goods. As we see that start to neutralize, abate, balance itself, we will see things taper off on that end. In the meantime, we expect that the Fed to continue its policy where it says we're going to continue rising interest rates. By the way, not a horrible thing to actually get rewarded for loaning someone money for time as opposed to getting nothing, which has basically been the way it's been. But the road back onto normal street is sort of a little bumpy. Like we went off road and then we're trying to get back on. We're going to experience some of those bumps right now. What does it mean? It means we're going to have some chop in the water. That's it. This is a part of the normal process. Know that if you have any questions about how your money is invested, please reach out to me and let's have a conversation. But until the next video, you take care. And remember, fasten those seatbelts, take a look around you, and enjoy the fact that we're going into a summer and economically, we're not seeing strip malls being closed. We're not seeing places saying, I can't hire people, I'm laying them off. It's kind of been the opposite. Keep that in mind when we take a look at what's going on in the world. Talk to you soon.